guess you are it. I got a text from Hillary. She had to go back to the doctor for tests. I think she's had a lot of kidney stones or trouble. Jonathan, I guess he's still sick. And Terry always live streams, but we're it. Uh, Cole, did you feel more at ease last night with that program?
It felt way better. Most of us had W-2 or like Social Security. It was easier.
Yeah. The more you use anything, the more comfortable you get. Anyway, Clayton, how about you? You feel better with it?
Yes.
Sarah said you found some lady some extra money last night. What was that all about? Amended state return or what?
It was that one guy that had the state credit. It was another woman. Her mom. She was doing her mom's and hers. I did her mom's, and she got that state credit. And I did the credit plus the house because they're like together. The other, I forgot what the other one's called, like the mortgage or the.
What, the homestead?
The homestead, yeah, that's.
And senior citizen.
And yeah, that's the two. I think previously they would only file one of them. So I don't know what happened. Somehow it just came out to $200 more than what she normally got. And she sat there forever. Savannah pulled it back up and went back over to make sure I did everything right. And they said I did everything right. And they were just like, you just got $200 more.
Well, we'll take it.
Or maybe 300.
Well, thought I had the new PowerPoint on here. I hope I do. Oh boy, it's not going to be good. Crap. I thought I had the new one on here. Evidently, I don't. You can go back on this one. I know I downloaded that new PowerPoint. Let me try one more thing, I guess. Did you run into any hard situations last night, Cole? Don't know of any?
No.
You're getting familiar with the forms, W-2, Social Security, 1099. That's about it. They've got dividends, they've got interest. I don't think you've had any capital gains yet. Brokerage, that's a 1099B. You will might, before it's over, get some of those. I'm gonna have to look at these old PowerPoints. There's not a lot of difference. Okay, now, Hillary left somebody's W-2, laid on top of her computer. I put it in my office, and she was supposed to mail it to him today. Well, Hillary, I'll wait till Tuesday for you to mail that. And Sarah may not be here next Wednesday, but she told you guys the bag was on her desk, and Michelle had the list. So we'll be okay. She'll probably make it. Sarah's gotten pretty good at this stuff. She's done it for 4 years now. And 1 year she got credit for it for internship, 1 year for an accounting elective. Last year she didn't get anything for it. She wasn't even work study. I got her on at least 10 hours a week work study, so she's getting 10 hours work study for it. That's a little bit. I'd like to have got her 20 because she puts a lot of time into it. A lot of calls. be in there 3 or 4 hours from that night, and she earns her work study pay. Unlike other work studies we may have that do nothing or have nothing to do. Anyway, we've got to finish personal taxes with this chapter. Then we'll get into inventory and accrual basis of accounting for tax purposes. Then we'll get into corporations, and that will finish up our business tax or advanced tax portion. And what we've done so far this semester, we've reviewed personal taxes. We passed those tests. We've been preparing taxes. Now, we never went over one thing about West Virginia. We just depend on the program, carry the federal over to West Virginia. But you're learning some things about West Virginia. They have that senior citizens credit and credit homestead, whereas other states don't. But somebody told me West Virginia charged you on Social Security. I don't believe they do. I looked at one lady's last night. They did not carry her Social Security over to West Virginia. I knew Virginia didn't on taxes. Now, the standard deduction of West Virginia, we always look at the farm. It's not 12,000 like federal. They still may give personal exemptions where federal don't. And same with Virginia. Now, Virginia don't have their out-of-state or whatever system down real good yet. But it is taking them in the computer, and they've got them on hold till they get their system ready to accept them. So we're good there. The program, maneuvering through that program, if you went by the individual questions, guide me. TurboTax does the same, guide me. I never let it guide me. I just go to income or W-2s, 1099s that I have, and other people. One little lady I'd been doing taxes for probably 30 years. Her and her husband had a trucking company, and I direct her to some investments. She's invested in about 30 different stocks. She gets dividends from 12 to 20,000 and interest income from about 10,000. So her and her husband are not poor. I had her oldest daughter in school that died with an aneurysm. I had her second oldest daughter in Garden High School. And so we go way back. So I get a note on my door last Friday. And her daughter was trying to find me. Her daughter-in-law, which I didn't have in class, but I knew her, that her mother-in-law had died January 26th. So she's getting stuff together for me to do her last tax return. I hate losing somebody like that, and I really liked the woman. And she had any tax questions, she always called me. She always paid me good, and sometimes give me bonuses. If I charge $300, she'll give me $350, and so forth. So, but anyway, that's, as my deceased mother-in-law would say, that's life. Everything that happens to us is life, isn't it? So, good or bad. But anyway, alternative minimum tax is still around. We'll look at your book on that. And I don't even know what page. If you look at chapter 14, that is still I-14. We're going to get back to chapter 11. There's a little bit about property transaction we've got to get back to. So we have slacked, but page 14-2 is what I'm talking about. Alternative minimum tax. And you take your taxable income, and we may have to add or make subtractions. Alternative minimum tax exemptions amount. You're married filing jointly for 2018. If you got under 109,000, don't worry about it. If you're single and you got under 70,000, don't worry about it. All right. So anyway, we've got new probably exemption amounts. Now, alternative minimum tax is a second tax. It's on your tax, then it's another tax. And how do you get alternative minimum tax? If you've got a small business, you've got a lot of depreciation, you may have alternative minimum tax. Otherwise, you may not. So it don't apply to everybody. Now, your computer program will calculate alternative minimum tax if they owe it. Whether you know anything at all about alternative minimum tax, it'll calculate it. So that's a good thing. But here we take tax preference items, which we look at, and adjustment items, which we'll look at. 2017 rates, 26%, and 28% over 187,000. But we'll have to run through that to get you to understand it. The adjustments would be standard deduction, personal exemption, which we don't have personal exemption, or itemized deduction. These are the two big ones that might hurt you on alternative minimum tax. All right. Now, if we look at your book in comparison to what I've got on PowerPoint, AMT adjustments. If you look at page 5, 14.5, itemized deductions, state, local, and foreign income taxes. Now, state, local, and foreign income taxes, how much, if you were itemizing from one of our clients on Wednesday night, state income tax and personal property taxes, how much could they deduct? What's the max? $10,000. So, New York City, it's expensive to live there. And Amazon just pulled out. I just saw it in the news at my break. Amazon was going to put a second corporation headquarters there, hiring 25,000 people, paying an average of $120,000 a year. And because of this Congress lady Cortez, they pulled out. The mayor and the governor wanted was going to give them some tax incentives, tax breaks. Because of that one Congress lady, Cortez, they pulled out. And now Virginia, Northern Virginia, gets that second headquarters. Nashville, Tennessee gets a distribution center. It's a lot of jobs. They're good paying jobs with Amazon. So these politicians can shoot their community in the foot. So you may not get elected again, but I don't live in New York. But why I mentioned New York City, state income tax is high. Now, if you made $120,000 in New York City, you may pay $12,000 or $13,000 state income tax. If you own a home, you may pay $5,000 to $10,000 property taxes. My home, I think I pay about $1,300 property tax. And my state income tax probably would be over $5,000 to $6,000. So I'm not hitting the $10,000 limit. It don't hurt me. If I lived in New York, it would. So some people are leaving New York because of that. Some people are moving to Florida where they have no income tax, or Tennessee, no state income tax, or Texas, or 6 states that don't have any state income tax. I think when I retire, I'll go to one of them. Save me $3,000 or $4,000 a year. So that could buy a lot of stuff. But all right. Well, I do like where I live now, so I hate to move. So here they mention miscellaneous state, local, and foreign taxes. Now, home mortgage interest that is not qualified housing interest. Qualified housing interest includes only interest on debt incurred to acquire, build, improve your taxpayer's home resident or second home, interest on a home equity loan used to buy a car. So interest is all still deductible. Now, the 2018 PowerPoint, 17 really taxes, we still got the same thing here, state and local tax and mortgage. Personal exemptions are out. Now, medical, we'll have to look at what they have. Now, standard deduction is not allowed for AMT. So we'll take out this standard deduction. It's X'd out, X'd out, X'd out. Not all of it, but some of it. We will try a problem. All right, let's start out with 100,000 adjusted gross income. Tell her I'm class. Hey, hon, I'm in class. And yeah, I'll try to call you later, okay? Goodbye. Okay. Anyhow, 100,000. Charitable donations is 4. Medical is 3. Interest is 18.4. Real estate tax is 4. State income taxes. Now, your itemized deductions add up to how much here? 35,000 what? Well, that's better than 24,000 standard deduction. Okay, so we got taxable income of 64. That's what your program would prepare. Assume that they also had 20,000 in tax preference items. Now, tax preference items would be depreciation. So you take that taxable income, add those tax preferences of 20, and subtract out real estate and local income taxes. Let's see, the real estate was 4 and the state income tax was 6. That met to 10. All right, 64 and 20 makes 84, and you'd add the 10 makes 94. So your alternative minimum taxable income is 94, went up from 64 to 94. Now, there are some credits we'll look at later, and we'll probably try to calculate one. But there's 2 reasons I won't spend a long time on alternative minimum tax. 1, computers calculate it for you. And 2, not many people are required to do it. Okay? So look at page 4-8. Excuse me. That's self-employment tax, and we'll look at those later. We know what self-employment tax is if you're self-employed. I have to pay a little self-employed taxes when I do tax returns. All right? We know that's Social Security tax. You pay double, almost double. 7.65 is what you pay as an employee. 7.65 is what the employer pays. That's 15.3. Now, IRS lets you multiply that by around 90-some%. So you're getting away with about 11 or 12% self-employed because you pay both parts. All right. You can read those laws on page 14-8. If you go down enough, it's on the first $128,000. Social Security is. Medicare, there's no limit. But now, net earnings from self-employed is defined as 92.35% of self-employment income. Well, you can multiply that by the rates. If you got a calculator, multiply 15.3 times decimal 9235.
2.1.
Take 15.3 times decimal 92135. All right, what'd that give you, Clayton?
14.3.
14.3. Well, that will probably be your rate. Now look down at example 8, page 8. Now, if you look at Social Security 0.124 and Medicare 0.029, Now add those two together, 12.4% and 2.9%. What does that give you? Could give you 15.3. Okay. All right. Now that's what the Social Security they're calculating in example 8. But look at example 9. The facts are identical, except Robert's self-employed earnings total 175. His net earnings from SE, self-employment, 161,613. And they're multiplying 175,000 times 0.9235. All right. Now, in your above example, they multiplied 75,000 times 0.9235. But here, would you multiply 75,000 in example 8 by that rate Clayton got? Was that decimal 14? Decimal 14 what, Clayton?
3.
What?
143.
143? All right, multiply 5,299 by that. No, not that. No, that's not going to work. Yeah, multiply. First off, multiply 75,000 times 15.3. Tell me what that amount is. 75,000 times 15.3.
$147,500.
Well, I'd hate to pay that much Social Security on 75,000 of income. Hey, you don't want to pay that much Social Security on 75,000. Now, once again, would you multiply 75,000 times 15.3%?
Oh, percent.
Yeah.
I thought you said 15.3.
All right, try that again. 75,000 times 15.3%. What does that give us?
11,470.
400 what?
70.
That would have been the rate on 75,000. All right, I'm trying to, okay. Now multiply that amount, multiply it by 92.35. What'd you get? Multiply that 11,475 by decimal 9235.
10,597.
All right, 10,501.
97.
Now go down on example 8, add together those two first taxes, 8,589 and 2009. $8,589 and 2009. All right, gives you almost the same thing. So you can multiply the Social Security by that amount, but the best thing to do is just put it on the form or let your tax program do that for you. Now, if you put it on the form, it lets you go through those percent, and you don't have to keep up with them like I was doing. Now, if your Social Security tax is $10,000, you're going to take half of that as an adjustment. Remember that. Okay? Social Security self-employment tax is other tax. All right, we know what self-employment income is. Now, if you make under $400, you don't have to count it as, you don't have to do an SE form. Some little lady, she was on some kind of Social Security disability, and you could only make so much. She worked on made about 8,000, and I think she lost her Medicare and she had to buy insurance. So she lost by working. So I think she's going to quit work this year. All right. Now, that is self-employment. That is your rates. You know, 100, and here's your 92.35%. Nothing's changed on SE. Additional Medicare tax. If it exceeds threshold, married filing jointly, if you exceed 250, you pay an extra Medicare tax of almost 1%. 0.9 is almost 1. Single 200,000 and separate 125. Now here's some credits. And we went over some of these credits the other day. We did that. Now if you're working two places, and we know 128,000 is your limit, you probably won't go over that, no problem. But just in case you worked at one place and made 100, and you worked at another place and made 60, then you went over this limit. You may have paid in excess Social Security taxes, and you get the overpayment back. Non-refundable personal credits. There is an adoption credit, child tax, dependent care, credit for the elderly, education credits, retirement savings, and energy savings. Now, these are refundable credits. Earned income is refundable. If you didn't pay any in, you can still get some back. If you pay in too much Social Security, you get it back. Depending on what your tax return is, you may get a refund. And then over here, you may get these credits will reduce your taxes, but they won't give you money. Now, some business credits, we'll look at those briefly. Energy, disabled. Does this building have any disabled excess? Such as elevators. They got a ramp in the basement that comes down to the first floor. Those are handicap items. Now, I was on affirmative action committee one time, and we would advertise jobs in the black journals and so forth to try to hard black. And of course, for people in wheelchairs, we made the door just push button, which we have some of those here. Push button to open door. We already had the elevator. But you know, handicapped people in a wheelchair sometimes cannot reach a water fountain. And some places they lowered the water fountain so handicapped people can get a drink of water. So if you've never been handicapped, you don't realize those things, do you? All right, but that's some of the things under disabled. Child care. This usually applies to historical structures. Are there any historical structures in West Virginia or the town of Bluefield? If there is, and are renovated, they may get tax credit. I don't know if it's in Bluefield or not. Going back to your textbook, the child care we've looked at, page 12. The adoption credit we have not. So we're gonna try to look at adoption credit. Dependent care, we know what that does. Now, adoption credit here, you can take expenses up to $13,520. Now, here it is 13,810. The credit is allowed in the year the adoption is finalized. The credit is phased out if you have rated over a $40,000 range for high income taxpayers, and AGI if it begins at 207, and so forth. Qualified adoption expenses are adoption fees, attorney fees, and other expenses. Well, I had a brother that adopted 2 kids from Florida. They had the same mother, different daddies. And for a long time, they didn't know they were half brother and sister. They thought they were whole brother and sister. And my brother and sister-in-law waited a long time before they told them. But if you're adopted, I think you should be told early as possible. Child tax credit, how much is that in 2018? Doubled, didn't it? A Trump tax plan did this. Now, have any of you heard, Clayton or Cole, has any of your people that you prepared taxes for said they got back less, got back more what?
Most of them said
All right, does that mean they paid less taxes than last year? Because one lady, she was getting back about 100, 200 less. That don't mean anything, because I asked her when Trump passed this bill, how much did she get each paycheck? More. She got $100, she thought, more each paycheck, twice a month. Well, that'll be $2,400 a year. So I just said, let's say you got back $50 a paycheck. You got back $1,200 more throughout the year. And had you paid in the same thing, you'd have got that $1,200 more back plus what you're getting back. That'd be definitely better than last year. So you got to look at that, okay? Now, with that in mind, Sarah gave me something to share with you guys. And I think they're saying about the same thing I'm saying. So let me bring up my little overhead here. All right. I gotta arrange all my junk here to get it up here. Maybe most of us could read it. There were major changes made to the tax law. If they grumble about getting back too much or too little or whatever. All right. One part of the law changes the way taxable income is calculated and reduces tax rates. All right. Many taxpayers withhold an increase, give them more money in their paycheck all year long, and they get back less of a refund, which someone may be whining about. Now, if they just had Social Security and 1099-R, and they got back less, then they're doing worse this year than they did last year, because they didn't have a paycheck to have withholding on. Okay, I saw probably, we get paid up here every 2 weeks. I may have seen $50, which would be $100 a month. That's $1,200 for me. I don't know how that's going to end up affecting when I owe taxes. I usually owe 9 or 10,000 in the year. In addition, I have a whole lot withheld on any 1099Rs or even Social Security. Have a whole bunch withheld. With those state withholds, I still have to pay 9 or 10,000. All right, can't complain. But if maybe I wouldn't have to pay it. So I'm not complaining. And I've used IRS's money all year, interest free. And when it's too much, they charge me interest. All right, that's just a note. Why is my tax refund smaller? It's smaller because of the change in the tax law, and you did not take the steps to adjust your withholding after the changes were made. There are other reasons your refund amount is different, but we can't go into all those. Some of them have kids, some of them kids leave, what have you. That one lady though, one night, she gave Savannah Hale, over $7. All right, so you're gonna get a copy of this. And I'll give the rest of them a copy when I see them. Okay, back to business. Sometimes it's just an appropriate time to throw in those little things. All right, now that child tax credit increased too. Now, if you look at that on page 14, your tax credit is $2,000. Now, that's if a child is under what age? What age do you find on page 14, first paragraph? All right. Now, what was the 19 deal? Under 19, what was that deal? Still claim them as a dependent. Might get other dependents credit. And if they're under 24, you can get education credits. Now, that's where we're at. Look at page 14, higher education credits. They mentioned the American Opportunity Credit. It's allowed up to $2,500 for tuition and related expenses paid during the tax year. The credit allows 100% of the first $2,000 of the qualified expenses plus 25% of up to $2,000 more. Now, what is 25% of 2,000? How much? So they give you a 2,000, then they give you 25% of 2,000, and that's where they're getting the 2,500 from. All right, so it doesn't matter. 2,500 is the most you're going to get, even though you paid out 10 or 15,000. My granddaughter wants to go to Vanderbilt down in Nashville. I think their tuition is about 30-some thousand a year. That's ridiculous. Now up here, how much is it, Cole? About 8, 7 a year? For the whole year?
Oh, for a whole year.
Around 8 or so? All right. Now this lifelong learning credit, it's allowed for an unlimited number of tax years, on and on and on. Now this opportunity tax credit is offered for how many years? How about the higher education? How about the American Opportunity Tax Credit? The 2,500. How many years do we get that? I think it's the first 4 years. It is the first 4 years. But let's say you want to go to school 10 more years. All right. Clayton, this already makes you 13 plus 2. This makes you 15 years, don't it?
For what?
School. Did you go to kindergarten?
Yeah.
You go to preschool too? So it took you 14 years to get out of high school. And you've been up here too? That's 16.
30.
That's 17. All right. And you're how old? 21?
20.
So you started school when you were 3 years old to preschool, or 3 or 4. Doesn't hurt. I think you ought to learn from the womb to the tomb. All right. That's also known as from the cradle to the grave. Well, the cradle is out of the womb, but similar. That's not original by me. My president at the community college used to say that. He believed that. We don't have a president up here long enough to say anything. We're getting a new one. All right. So we'll take that for 4 years. Now this lifetime learning credit. Now let's say you had 20,000 of tuition or books. And we multiply that by 20%. That would be 4,000. But you are limited to 2,000 a year. The smaller of the two. Now let's say you only paid 5,000 in tuition. All right, 20% of 5,000 is 1,000. All right, which one do you take? The 1,000 or the limit? You didn't reach the limit, so you take the 1. It's the smaller of the two. No more than 2,000. Smaller of the two, no more than 2,000. Now, I was asking my international students, I'm going to ask you a couple of same questions. Cole, do you know what a millennium is? You're a millennium. What are you?
Born at a certain point.
Yeah,
Certain
born.
It's like under a certain age, isn't it?
Uh,
Or between
It's probably up to 25 or 28. I guess you were born at the turn of the century or something like that. So, I asked my international student, France is 100% health care. Argentina, you have to buy. Spain, I believe you have to buy. Serbia is 100% health care. Now, that's 5 countries I have represented in there: Spain, Serbia, Argentina, France, and Spain. All right. A couple of these countries gave, 3 of them, I think, gave free education to everybody. Now, one country gave free education as long as you want to go to college. But if you want to go to a private college, you pay. We know Emory and Henry nearby is a private college. I think Bluefield College is a private college, church supported. So, but now Clayton, who is paying for your education? Scholarships, Pell, student loans, what?
Loans and financial aid.
That's right. I use financial aid some. There's no excuse for anybody in this country not to go to college. My son owed a couple $100,000 in student loans, and he went to chiropractic school. He borrowed $100,000 a year, and he borrowed the limit, lived it up. Went to school and lived it up. All right. Um, so he owes a lot of money for his education. Now, so if the government paid for your education 100% and yours paid, would you appreciate as much? Would you study as hard? I don't know. Depending on the individual. Sometimes something you pay for yourself is like if you buy your own car, you'll take better care of it than if you're using daddy's car. So that's debatable. Now that's where socialism comes into this country. Those who want the Medicare, everybody has health insurance, everybody has education. That's where socialism. Now, this government runs the post office and the military. Serbia said they didn't have any military, but they do. The government runs the post office. But when the government starts running the insurance, education, then it becomes socialism. Now, they already interfere with education institutions. If the government gives any kind of grants to Bluefield State must be equal opportunity employer. They must already a certain percent of minorities, but women, blacks, what have you. And I think Bluefield State abides by that. Now at the community college, they had to do the same thing. And one time, we hired a black female, and I worked with her and liked her. But she didn't have as good a qualification as a white man. But we needed her for our minority quota for a grant. And that's called reverse discrimination. White man should have got it. She got it because of her color. So, but I liked her. She was a good professor. All right. So there's some inequities in our system. And I hate in our day and time that there's still discrimination. Back when I graduated, there was the hippie generation. Employers discriminate against long hairs and beards. They've always discriminated against overweight people. I think they discriminate on people with tattoos all over their body. And I know some of them would discriminate if they knew you were transgender or homosexual. They'd discriminate. But maybe one day all discrimination will be wiped out. Maybe. All right. Take advantage of these. Now, I used this lifetime learning myself when I went on. Hey, Clayton, I went to school 19 years, and that's without preschool or kindergarten. Didn't have it. I started right out in the first. I had 12 years of high school and 7 years of college. All right. 4 years for a BS, and it took me about 1 year for a MBA, 2 years for different certification and toward a doctorate. But when my wife got sick with multiple myeloma, I quit working on anything except passing test fire rest or going to seminars. All right, now energy credit might not be much, but it is what it is. They've had a range. Okay, residential energy credit, I believe it's still 500 or it may be 1%. But in your book on page 17, labor cost to install the property. So let's first off, I'm going to guess at what they give it to you on. They won't give you residential energy credit on gas, coal, oil. It's got to be alternative. If you have wind power, now some of our Congress people are supporting doing away with fossil fuels. We'll do away with coal and gas and oil. Windmills, solar. How would you like to have windmills on every mountaintop in West Virginia provide electricity? It would take the whole state of New Jersey with solar panels covering the whole state to produce enough power just to give New York City electricity. Okay? So, solar power is alternative. Geothermal, that's getting energy from underneath the ground. And then there's water power. Dams generate a lot of electricity. But, you know, that would be going green to use water power, wind power, solar power, ground power. All right? Now, this residential energy credit, you can read about it. They used to give it to you for insulating your house or putting in, I think I even got this energy credit on a refrigerator one year because it was low energy. $500 per taxpayer. They still give this, they give you credit for saving. They will give you credit for saving on a retirement. I get that because I take out up here. Foreign tax credit, and your program will work that out too, but you can put that on the back of the form. All right, business credits, last little bit of time we have. I told you these rehabilitation expenditures were on historical structures. Some employers provide child care, that's 25 and 10. Disabled excess 50% of up to 10,000 if you put in a ramp. Lower water fountains. Now the state of Virginia did something for me one time and I appreciate it. I had a man in a wheelchair at the community college. He already had a BS degree. And he had some kind of voice box. He talked through his computer. All right, his hands were pretty much disabled, but he could use the computer. So he got all the courses at the community college he needed to set for the CPA. But he was from West Virginia. And we wrote the state of West Virginia, and computers were never allowed on a CPA examination, but they let him use a computer. Okay? Because his hands were just like so, and he definitely couldn't use a pen and pencil like you and I. All right, so we do have this qualified saving if you look at page 17. So there are some good business credits. Related on page 19 is that credit for historical structures. We can look at examples later. Now I want you to look at page 20, work opportunity credit. All right, tax credit equals 40% of qualified first year wages up to $6,000. Now what is 40% of $6,000? 40% is 2,400. What's 40% of 12,000? Double that, 4,800. 40% would be 4,800. How about 24,000 in target group? What's 40% of 20? Double the last figure. Now, target groups, ex-cons. Would you hire an ex-con? Would you give an ex-con a change? You believe in second chances, Clay?
I guess it would be.
Depending on what they were ex-con for?
Yeah.
Military, handicap. Would you give a handicapped person a job? Would you give a vet a job? Would you give an ex-con a job? I'm like you on an ex-con. I believe in giving second chances. Sometimes it's backfired on when I give second chances. Most of the time it works out good. Last year, the acting dean did not want Sarah to be work study. Sierra did use the F-bomb pretty often. But I wanted Sarah, and I wanted her this year. I got her office back. I don't think any of you heard her say the F-bomb, have you? She quit. Now, that was the second change for Sarah, and she's done good with it. Okay? I needed her, number one, and she's come through real good. She can run that program by herself. She don't need me anymore. Sometimes there may be a funky looking form that I have to maybe explain that she hadn't seen. All right, and we'll always get those. Some of them little letters y'all get and some of those statements, they're just statements from the bank to that person. They don't have a tax document on them or a 1099 on them. We don't fool with them. Earned income credit, we looked at that. You know, I like this earned income credit. Do you know this earned income credit? Let's say you got back that 4,000 something a year. All right, let's say you got back whatever that large amount was. If you got back $4,800, divide that by 12 months, how much is that? How much?
400.
At 400. Now let's say your wages was about oh gosh, what would wages have to be now to meet some qualification? But let's say your wages were just 300. Well, minimum wage. Somebody multiplies. What is West Virginia minimum wage? 825 or 8? Multiply 875 times 40. $350 a week. All right. That would be how much a month?
18,000 a year. That times about 50.
All right, but how much would that be? Let's say 4 weeks would be 1,400. All right, let's say in 4 weeks, maybe you get paid every 2 weeks. Now let's say your federal income tax on that was $50. And your state income tax was 20. Now multiply that times 7.65. What will be your Social Security and Medicare? 7.65. How much?
$53.55.
Let's make it 54. Now your deductions is $124. Right? Now this you're supposed to get back 200 a month. Right? No, 400. That'd be 200 every 2 weeks, wouldn't it? All right. Now they'll give you this 200 back in your paychecks on earned income credit. Now this is where we add 200 and minus 124. What is your net pay? Add 200 minus 124. What's your net pay? if I'm doing this right, your gross, your net can be more than your gross. Your net is higher than your gross in some cases with earned income credit. That's what I want to prove to you. All right. All right, we looked at the child credit and that earned income credit. I want you to look at page 44. I want you to look at that premium tax credit. Now, I don't know if this is going to go away soon or not. But you know, if any of you did a tax return where the taxpayer has to pay a penalty for not having health insurance, you've always had 12 months of coverage.
I mean, no, one time this dude didn't have it, but it didn't know.
Did he add on a penalty?
Yeah.
If you go back and look at his return, they added on a penalty. Well, I thought Trump was doing away with that in 18, but it don't take effect until 19. So next year, we shouldn't even have questions about health care. All right, guys, I want you to read this chapter well, of course, start working even problems. We're going to get rid of this chapter and maybe at least one more class meeting and move on. I've got a meeting today to try to help hire somebody for entrepreneurship position. Miss Belcher wants to just go back to part-time next year. So we need somebody. And we've got a bunch of applications that we should be able to look at.